Welcome back. You're still with Crystal Ball. I've been in conversation with Pankaj Vaish of CITI, his last Indian interview before he heads on to head markets at Mexico in South America. Let me ask you to wear your banking hat for a bit, because the crux of this India problem over the last couple of months, most of the debate is centered around what's happening with the banks. You know, we're running into a budget. What would the markets be calmed by with regard to the asset problem with banks? Because there have been lots of theories, bad bank, maybe just put a band-aid for now and see how it goes. What's the solution in your eyes?
I think the mission is actually a good one, right? It's commendable. Somebody had to come and tame this. It is, again, another sin that people have walked away with so much of taxpayer money. So it's right that this problem at least has to come to the surface, and frankly, some people should go to jail for it, quite honestly. And I don't mean just the defaulters, but anybody who facilitated it should go to jail for it. And so I think the governor is right that the problem should be acknowledged and tackled. It's unfortunate that it was synchronous with a global risk-off scenario. And thus, you remember from your high school physics, that amplitude gets much higher when you get these two cycles coinciding at the same time. To stop the bloodletting, to answer your question, I think firstly, everybody has to stop cheerleading and giving unrealistic numbers. I think people have to, they may even come out and say, we don't know the true number of capitalization that's required. It's a moving target. We will see, because some of it is a circular problem. We will see what it is, but we assure you, we will provide capital and lay out some rough timetable. You know, if the shortfall is, let's say, $30 billion, we will give a sixth at the end of this quarter, and just lay out something, and then at least people know that there is a problem and there is a solution in a time-bound way. You need the owners of these banks to come up with a plan, a time-bound plan to say, this is how capital will be allocated, rather than just saying, we're on the same page with the RBI and you know, all nice stuff. But I think we need some more clarity. If not necessarily in the budget, then soon after that, do your homework and come out with a clear press conference where this is laid out. I think that will give people confidence. If for a Punjab National Bank to be $2 billion in market cap, it's a big bank. I think owners need to come out and give us a clear roadmap on that. BOB and SBI is saying very clearly they don't have a capital issue. And so BOB did a little bit of this kitchen sinking thing, and you saw the stock, at least for the time being, recover. I think just as long as you put in a bottom in these, acknowledge the problem, things move on.
How bad is this global cycle, Pankaj? Because the year has started very badly. Nobody quite knows how big the problem is. Is it looking like the foothills of a global recession, global bear market kind of a situation, or you just don't know yet?
That is the big question, Udayan. That is the big question. December 31st, we all went home thinking things are okay. Yeah. And it's like as if something suddenly, the lights went out in January, and globally everything has come off. So clearly, and the way the bank stocks are trading, not just, obviously not just Indian banks, European banks, I think European banks just never took the bitter pill. They had to take this medicine and they didn't do it. And now they're going to have to dilute themselves or shed cumulatively hundreds of billions of dollars of assets. But for most banks to trade so far below price to book, non-Indian banks, just means that there is this fear, right? People start drawing analogies to 2008. We don't think it's 2008 from many different angles. Most importantly, the leverage in the system is so much smaller. It's probably a full order of magnitude lower than what it was in 2008. If you look at the leverage of all financial institutions, it's very small. Households, it's very low. It's really just the US corporate sector that's still a bit stretched. So we don't think it's that. We think there is a general, and sometimes you get this, you get a synchronous sort of risk-off environment that took place. The oil price collapse definitely was a catalyst, because oil energy sector loans are in terms of billions of dollars, they are large, although they're about 3% only of banks' balance sheets, US banks' balance sheet, and about 70% of that, we are told, are investment grade. But the amount of market cap loss that has taken place is already in excess of that. So we think this is an overreaction. We think this is more like a 2011 rather than a 2008. We don't see from any major angle why this should be an 08 kind of crisis. Whether US goes into a minus 0.2 versus a 1.1, GDP, that's hard to say. But again, I don't think that requires this kind of a sell-off in all banks. I think, again, this should be a more EM-like, very bank-specific thing. So there are certain European banks that definitely need to dilute themselves. But there are many others who don't. So our economist still, our global chief economist doesn't think that recession is a high likelihood. And we don't think this is anything like an '08 crisis. Few things have come together which have made these stocks go down a lot. But if you look at the index overall also, S&P, it's not really down that much. You're talking about maybe 5, 7, 8%. If it was a global recession kind of a thing, this thing would have already been down 20%, and that's not happened.
But with what kind of accuracy in the past have economists been able to predict the event before it happened?
Yeah, no, you're right. I mean, all we can do is look at these gurus and then use our own common sense to see what is the likelihood. Like I said, for me, a very big factor tends to be leverage in the system, because then you know people are just forced to dump assets, regardless of price. And management in US and now hopefully in Europe tends to be ruthless. The new CEO just comes in and says, I want a clean balance sheet. Get rid of it, mark it to the last guy, and move on. The leverage in the system is not that bad right now. It's actually quite low. If you've charted over many years, it's very, very low. And households this time in US are also in pretty good shape. So I don't see, jobs growth is still okay. Wage growth actually has picked up in the US. So I don't see, the strong dollar is a problem. And I think if that becomes much, much stronger, our chief economist, William Bouter, thinks that that could be one tipping reason. But the real ingredient that goes into tipping something over in a shocking way tends to be leverage. And right now, I think we're very clean from that point of view, at least in the US. So that's what makes me feel, hopefully the probability is low. But yeah, nobody has a very good track record in this.
It's been enlightening, Pankaj, hearing you over the last many years. I wish you all the best for your role in South America.
It's been such a pleasure to interact with you. Thank you so much.
Thank you.
Thank you.